Hi, good afternoon, ladies and gentlemen. My name is Josh Epstein. I'm the marketing specialist for TDA Perks. Thanks for joining us today. Our webinar, Dental Office Rules to Minimize Your Credit Card Fees, will be presented by Mr. Phil Nieto. He is with Perks vendor Best Card, and Best Card offers TDA members credit card processing services. They are endorsed by several state dental associations, including the ADA. So we'll learn today how to understand your credit card processing costs and what you should really be paying. We'll go into the numbers, how much does it cost to acquire a new patient and what's going to be the resulting return. And lastly, we'll explore credit card surcharging and why it may not be the best processing option for a dental practice. So as a reminder, TDA Perks, we offer several different endorsed vendors, to assist you with all aspects of your practice. I want to also mention the latest free member benefit from TDA. It's called the Dental Concierge CE app, and it will allow you to track the CE you've completed and see what you lack. You can get high quality courses that you need at a low cost, and you can submit all the information to TSBDE. And we do have a class coming up here on Friday, so you can take a look at our website, and it's dentalconcierge.com. And lastly, I really want to mention that we have a new vendor. They're called ERC Specialists, and they help guide you through the employee retention credit process. The credit rewards businesses that maintain staff during the early stages of COVID-19. You can get more information by visiting TDA Perks and proceed to their landing page on our website. And they've really done a fantastic job. They found over $11 million in refunds for TDA members. So I really urge you to take a look at that landing page. You might not think you qualify, but you might. So that's definitely something that we want to make you aware of. Again, that number is 11 million in refunds that were found by ERC specialists. So with that, Phil, are you ready?
Yeah, I am. Thanks, Josh. So hi, my name is Phil Nieto. I am the president of Best Card. As Josh mentioned, we're the TDA Perks endorsed credit card processor, as well as working with the ADA Member Advantage program. We're kind of going to walk through some of the basics today on credit card processing. The goal is kind of take it out of the realm that a lot of people hear about it in, which is mainly a salesperson talking to them about what they can do for their office, and more dive into the basics of understanding kind of the building blocks of the pricing, and then what you can do to really limit like your overall costs. So basically, when it comes to credit card processing, what we really want to dive into is, all right, what are the most common mistakes that we want to avoid? What are the tips that we should do in the office? And then what are the things that we should look at when, to know whether or not we're getting a good deal with our current credit card processor? So I want to start with three important numbers. So the effective rate for an average dental office out of the more than 2,000 comparisons that Best Card did in 2021 was 3.38%. That means that for the average dental office, they're paying $3.38 to run $100 in, credit card payments, a payment from their patient. With Best Card, our average was 2.12 in the same year. For Texas, the average interchange cost, and this is another important number that we will kind of explain and break down later, is 1.48% in 2021. So in credit card processing, there are a lot of different fees that add up to your total. Some processors will show you each and every one of those. Some processors will kind of hide the fees. So at the end of the day, the area that's probably the most effective thing, if you're going to take one piece out of this today, is to figure out how to calculate your effective rate. So to do that, you have to take all the fees that you're charged. Now, one thing to be aware of with that, some credit card processors will not only charge you on your monthly statement, but you may see separate additional fees coming directly out of your bank account. So you want to find all of those different charges from your credit card processor and then divide that by the dollars that you ran in sales for the same month. So this gives you the effective rate. And the reason we love the effective rate, it gets around any single rate or fee that they claim to be offering and just looks at everything. What did you pay to run the cards that you have processed? As I mentioned before, the average dental office in 2021 was paying 3.28%. So, to calculate that effective rate, say your office, paid $1,027.45 to run a little over $37,000 in fees. You do that simple calculation, and for this office, and I actually took this from an office in Texas that we did last week, they were paying 2.75%. Not good, not terrible. What I generally tell dental offices is that if we're doing things correctly, your goal should try to be an effective rate near 2%. So the average office paying 3.28%, really for a dental practice, trying to get to that 2% marker should be like kind of your benchmark of how well you're doing. Now, how do you get to 2%? Part of it is understanding, like, what are the credit card processing costs that I'm paying to the card issuers? What are the costs I'm paying to my credit card processor? The other part of that, though, is knowing what are the best practices that you need to be following in the office day in and day out to kind of maximize your potential savings. So finding your effective rate, this is a dental office, basically, like I said, they were just under 2%. The question is going to be, what does it take to get us there? So the basics of credit card processing fees is that there are direct fees that all credit card processors pay, and those are non-negotiable fees. It's kind of the pricing floor that we all have, and what we charge on top of that is where we compete. So those non-negotiable fees, the biggest one, and what should be 85% of your bill if you have a good credit card processor, is interchange. Interchange is basically the direct fee from the card brands, depending on the types of cards you accepted. Next is dues and assessments. So dues and assessments are fees directly to Visa or MasterCard on the total value of maybe Visa credit and Visa debit cards. Those are other direct costs. There's a couple fees in there that are very, very small, but once again, every credit card processor pays those same fees. And then with the other card brand fees, these are fees that sometimes are pennies on every single monthly statement, but across, everyone that accepts MasterCard, they really add up to, a lot of money to the card brands. So there are those fees that are basically fixed that every credit card processor pays. Now, whether or not they show them to you is kind of a different question. But then there's fees from the processors, and those are negotiable. That's where we all compete. So those can be like flat fees if you're paying a flat fee for your rates, like a discount rate if you're on a different type of pricing, higher fees for certain card types. There are fees like risk assessments and surcharges that are just really made up fees. And then there's account fees and monthly fees. And all of those all together, remember, go into your effective rate. So that's why looking at 2% kind of takes all of that into account when we're trying to hit that 2% mark for your total fees. So as I mentioned before, the average Texas office had a dental interchange of 1.54%. That interchange fee, so basically this is the fee directly charged by Visa for this particular type of card, or MasterCard, Discover, or American Express. Interchange is determined by two things: the type of card a patient is choosing to use and the method that you accepted the payment. So, and I've mentioned this before, but all processors pay the exact same interchange. That doesn't mean they pass it on to you in the same way. So if we look at interchange, as far as different types of cards, what makes a difference there? So for example, debit cards are always cheaper than credit cards. You don't need to put in a PIN. You don't even need to know you're running a debit card. Your machine knows exactly what type of card you run as soon as you put it in any method. Also, debit cards from big banks are regulated to have a lower cost than small banks and credit unions. So those big bank debit cards, like I said, if anybody pays with a debit card that's from Wells Fargo, for example, you paid a way lower fee than what it would cost to take a high-end rewards card. Generally, if we go up to credit cards from there, the better the perks on the credit card, the more expensive the interchange fee that you're going to pay. And then corporate reward cards tend to be the most expensive. So those are business-to-business payments. For a lot of dental offices, the area where you will see this is if you are accepting virtual cards from your insurance company as a form of remittance, rather than having them cut a check or do a direct deposit. So those types of cards make a big difference, but on top of that, how you accept that card also matters. So for example, a card present transaction where it's chip, swipe, or contactless payments, those are always cheaper than if that same card is being keyed in remotely. So whether that's a phone payment, internet payment, the card, if it's present, has a lower risk of fraud. So they reward that by having lower rates. Also, what affects a keyed payment is if you have extra information added to the transaction, like the street address number, the zip code 5-digit number, or the 3 or 4-digit security code. Basically, that will also get you a lower rate on that transaction because it shows that there's lower risk of fraud. So kind of two different examples. On the left is a debit card from a big bank. On the right is one of the most high-end rewards cards. Essentially, like, the interchange on the card on the left is 0.05% and 22 cents per transaction. So if we do easy math, a $10,000 sale on that card would be $5.22 in fees. If we take the card on the right, much higher rate. So instead of 0.05%, it's running at 2.2% and 10 cents per transaction. So that same card, if we were to do the same transaction for $10,000 that we did, that was $5.22 for the debit card, would be more than $220 in fees. So you can see, like, those cards make a big difference. Also, if you were to key in that card on the right, it might be like 2.5%, so $250 versus $210. So understanding that there's that difference in interchange can really make a big difference of knowing, all right, what can you do in the office to limit those costs? And we'll dive into that a little bit coming up. Now, a quick note, earlier this year, the card brands made a relatively big change. So they had put off any kind of rate increases on different cards throughout COVID. Now, I want to separate this here. That doesn't mean that, your credit card processor didn't initiate their own rate increases. Those could be two separate things. A lot of times a rate increase from Visa or MasterCard will mean that a lot of credit card processors will choose to raise their rates. In this case, this was actually like one of the big ones from the card brands. And essentially, out of all of the 1,200 cards, they really only changed one category, which were keyed in cards that did not have that address or zip code or security code information enabled. Those cards went from having a price cap previously of 2.7% for consumer cards to 3.15%, which was an absolutely huge increase. You're paying an extra $45 for every $10,000 processed on those cards. Now, the good news, that rate increase and like that card type is completely avoidable by making sure that your staff is always putting in at least the 5-digit zip code and the card security code. We'll dive into this a little more later with our 7 tips, but I did want to call out, this was a change earlier this year, and a lot of people, if you're not following best practices in the office, this could have resulted in some pretty big increases, or your credit card processor may have used it as justification to institute increases of their own. So this is just a sample interchange report. So this is from one of our statements. You can actually see, here's all the, so for example, this is Visa. Here's all the different card types that they accepted. In particular, some of those cards, are above 2%. A lot of them aren't. But then, with the debit cards, a lot of those are substantially cheaper than you'll notice like credit cards for the same amount. So basically, one of the problems with credit card processing is that processors can make understanding the cost more difficult than it needs to be. Statements can be hard to read. It might not have all of the information for like the credit card processing fees, which makes it more difficult to know what you're paying and to who. While all credit card processors share the same underlying cost, the prices they charge you can vary really wildly as far as like how they're charging, the pricing structure you have, or even what those rates are. And last, understanding what you're paying for is like the first step to saving money for your practice. So in that vein, I'm going to go through some of the different pricing structures. We see flat rate pricing, which is kind of saying, all right, this is the one rate we charge for all cards. Base rate and a surcharge is saying, all right, here's the base rate that maybe we advertise, but then there's other fees that come in on top of that. Tiered pricing takes all of those 1,200 cards and puts them into a couple of buckets so that you have, maybe a couple hundred cards running at the same rate as far as what you're charged, and that rate includes their profit margin. Interchange Plus is generally like what, we always recommend to have like the most, transparent pricing method, where they pay the exact amount, like you pay through the exact interchange, and then the plus is where your processor competes. Last is Interchange Plus, but with surcharge. Some people think they have Interchange Plus pricing, but then they have extra surcharges from their processor that make it much more expensive. So we're going to dive into each of these, right? So a flat rate, instead of worrying about like the interchange of different cards, you kind of have a single rate for all cards you accept. Now, sometimes these processors will do one rate for like card present and one rate for card not present. What's nice about it is, it's relatively easy to understand. If you don't process cards a lot, you're running less than a few $1,000s a month, a lot of times these processors, because they charge higher fees, won't charge monthly fees. And so it can actually be a good deal if you have relatively limited processing volume. But unfortunately, that's about where the good news ends, because if you're going to have a flat rate for all cards, you have to charge some of like the most expensive like rates on all cards. You're going to make sure that you're still making money on those transactions. And any card that would be a cheaper cost, you're just going to make a lot more money instead of passing through a lower rate for those. So essentially, like, flat rate pricing tends to be pretty expensive because they're saying, all right, if I take the most expensive card, I still want to make this profit margin. Well, everything else, you're paying a lot more. So the average person on flat rate pricing might be paying well above 3%, when really, a better type of pricing might get them closer to 2%, even if it's a little bit less easy to understand. Now, this is an example of like a base rate plus surcharge. So a lot of people that have base rate and surcharge actually think they're getting a flat rate. So in this example, basically you can see like they thought they were paying a rate of 1.95% on all of their cards. But if you look down below, there's actually a second set of processing fees that are surcharge. So in this case, $26,500 of their $31,000 in payments had an additional rate above the 1.95%. If you do the math, that additional rate was 1.7% added on more than 80% of their cards. So what they thought they were being offered when they were promised, that flat rate, it actually is a lot more expensive than they were kind of led to believe. So with this type of pricing, there's really no real benefit to it. It is kind of a deceptive type of pricing, in my personal opinion. The cons, the difference in expected cost versus actual cost can be enormous. You don't know exactly what percentage of transactions will be receiving those types of surcharges. There's not really any benefits taking lower price cards, but the higher rates on higher price cards is still intact. And last, like those rate increases can be really common and hard to spot because, for example, they can raise the rate on the surcharge and leave the base rate alone. So if that surcharge were to go up to 1.8%, you would have to do the math backwards to figure out that you've been paying more. Now, tiered pricing is basically, think out of those 1,200 cards, you put them into different tiers. So I have a sample from a processor here, right? A lot of times, if you have tiered pricing, you'll see terms like qualified, mid-qualified, non-qualified for different types of cards. So it's kind of similar to a base rate plus surcharge, but it breaks it down a little more to where you might have tiers that are actually relatively, competitive on price. Now, on this statement, that's not really the case. Like the lowest rate they were paying on any card was 2.55%, which is really high. The highest is 4.2%. When it comes to tiered pricing, the pros, it's a little bit more flexible and lower costs, usually than like the flat rate or base rate plus surcharge. But the cons are we still have the problem where we don't know what cards are on which tier and what we're gonna what we're paying to the processor on each transaction. I have seen instances where processors have 95% of cards at their highest non-qualified rate, and they don't give so even though they probably advertise the qualified rate that sounds like a better deal, that non-qualified rate ends up being what the vast majority of payments can fall under. Often with tiered pricing, they don't give separate lower rates for debit cards. So for example, Best Card used to offer tiered pricing. We did have separate debit rates that were substantially lower than the credit rates, but not all credit card processors will have a separate debit rate. And then last, because they're, kind of absorbing any pricing changes within like that rate, price increases can be like really, really frequent. We'll dive into more of that later about looking at price increases and how those work. But yeah, frequent price increases, it's really easy in credit card processing to get a good deal when you sign up. It's really, really difficult to sometimes know when those costs have, increased on you. So Interchange Plus is the pricing that if, you trust me enough, I would tell you anytime that you're talking to a credit card processor, this should be the pricing that you ask for. So what Interchange Plus does is they pass through the direct interchange from the card brands at their true cost, and that's important. And then the plus is where the processor competes against other companies. What I love about this is basically it gives you one area, one line item where you can see exactly what you pay directly to your credit card processor versus what's paid to Visa, MasterCard. Because remember, what's paid to the processor is negotiable, what's paid to the card brands is not. You then know exactly what you need to negotiate on. Sometimes Interchange Plus is also called Cost Plus or wholesale rates. Wholesale is a term that doesn't really have a lot of meaning in credit card processing. So it's kind of a red flag for me when people call it that. But if they call it that and they mean Interchange Plus, you're in okay territory. So the pros and cons of Interchange Plus. As I mentioned, it's the most transparent pricing method. It's the easiest to get a good deal because it's the least risk to the processor. They're passing through the cost that they pay the card brands no matter what. Versus on a flat rate, if I am charging less on my flat rate than the fees that I pay the card brands, I as a processor can actually end up losing money. right? So on Interchange Plus, I know I'm never going to lose money on the account. So it makes it easier to negotiate for a better deal on your side. It gives you the full benefit of like basically any practices that you follow, like best practices in the office that we'll go over at the end of this presentation to reduce your interchange costs. You get 100% of the benefit from that. And then easiest in the long term, it's the easiest to go without rate increases because any rate increases on the card brand side are being passed through directly. Your credit card processor should not be raising fees. That doesn't mean that they don't raise fees. And honestly, the biggest con with Interchange Plus pricing is that some credit card processors basically call their pricing Interchange Plus, but then add in additional surcharges that they don't clearly disclose. So remember, like I said, Interchange Plus pricing is what I would always ask for. At like we offer Interchange Plus 0.3% plus zero per transaction to all Texas Dental Association and American Dental Association members. That pricing is guaranteed for the life of the account. And on this pricing, we save the average office more than $4,000 per year. It's actually $4,221 was our average savings in 2021. In 2022, we're actually averaging above $5,000 in average savings for offices right now. Like with our DSO clients, this is the only pricing that we offer. The DSOs will be on this pricing method across the board for everyone. So if you're looking for your practice, this is totally what I would recommend as the best pricing method to ask for. Now, the downside is sometimes people think they're getting Interchange Plus pricing and they get set up for Interchange Plus with a surcharge. So on this pricing, you appear to be getting like the direct fee, but then there are added surcharges added either indirectly on Interchange or as a separate line item. And that can really put the cost through the roof. So this can be really deceptive, really kind of hard to catch unless you know the industry well. So I'm going to show an example here. So this is an office, and if we do the effective rate, they paid $4,955.06 to run $113,000. So it comes out to an effective rate of 4.36%. We know that we want to be near 2%, right? That's always our goal. How do we get our effective rate at or below 2%? So on Interchange Plus, 0.485% plus 29 cents per transaction, it's not particularly competitive pricing. Remember, we do 0.3 plus zero for any dental office, but it's not terrible. It doesn't kind of in itself show why there should be a more than 2% difference from what like the average best card office is paying. Well, basically, one of the things that we know because we compete against this processor a lot, you'll notice a lot of the cards when they list the individual card types on the statement have a 26 next to them. Well, if you do the math, every single card with a 26 is basically being charged an additional rate of 2.65% above the actual interchange. So if you do that math backwards, that was like really affecting the majority of their transactions where they were paying not, 4.85 or 0.485% above, but, 4.485 plus 2.65, that's a more than 3% additional charge on top of the actual interchange. Now, the problem with this, unless you know what some of these cards are supposed to run at, even doing the math is going to give you a percentage and it's not going to tell you, oh, this is the wrong amount. You would have to know, oh, World Card Elite Merit 3 should run at 2.2%, but instead it's running at, 5.1%. That's the type of thing where when I mentioned it can be really hard to catch, you have to unfortunately know that, to find out the details of what's wrong here, you have to know the industry at a really professional level. But even at a simple level, you can do the effective rate and realize 4.36% is just way too high. So once again, if you ask why I key in on the effective rate as, your best method to make sure your pricing is in the right place, that's the reason. It's, the other fees can really add up and can be snuck in there, but that will kind of tell you where you should be, at a much better level. Pros with Interchange Plus with a surcharge, there's none. The cons, like I said, hard to spot, can have drastic increases in fees. The surcharges are made up and instituted by the processor, and they often won't even negotiate in getting rid of them. And I will mention, we see this most commonly with credit card processors that are integrated into different dental software. So not all of them do it, not all of them do it on every single account, but more often than not, this is the area where we find this type of pricing that we tend to recommend kind of avoiding. So when it comes to credit card processing, there are kind of three mistakes that people make when choosing a processor. There's a lot of companies out there, and getting set up with a good one or a bad one, it's kind of hard to tell us. A dental office, I tell dental offices every day, I haven't ever met a practice that doesn't have something better to think about than how credit cards work. And finding the right company can be a little difficult. So we're going to go through some of those mistakes and things to kind of have like a red flag if it's being suggested to you. So first, when I talk about credit card processing rates, I mentioned before a lot of credit card processors will sign you at a low rate and then raise their costs consistently after that. So know that your rates may not last forever. A great deal that you like sign up with might even just in a few months be much more expensive than what you were promised. Um, Basically, like, Best Card gives a rate guarantee where part of our endorsement agreement with the TDA is that we guarantee those rates that we offer an office for the life of their account. There are a couple other processors that do that, but that's something to ask for. Say, what's your guarantee that you're not going to raise rates? Basically with this, a lot of times they adjust those rates when those interchange changes comes from the cards brands. So that's normally every April and October. So I have seen processors that claim, oh, we'll never raise your rates as long as our base costs don't change. Well, that happens 2 times a year. So you want to kind of really kind of narrow them down more than that. Really, the solution to this is, unfortunately, you want to be good at checking your effective rate every couple of months to get a good idea to see if your costs have increased. Cost increases aren't always tied to your processor raising rates. Could be changes in the types of cards you accept. But at the end of the day, that's usually a really good sign. If you notice your costs creeping up, that they've been raising your rates, maybe more often than you even realize. Now, tied in with that, a lot of credit card processors, we see sneaky contracts these days. So early termination fees are kind of common where, oh, well, yeah, we're going to sign you up here. And if you ever need to cancel, it's going to be, maybe $295 or $700. I have had one instance where an office left us because somebody promised them pricing that seemed too good to be true. And I told them that. Sure enough, with the extra fees, it was about 30% more expensive. And when they wanted to cancel, they were told that their early termination fee was going to be $107,000 because it was based on a lost profitability clause. So the thing I always recommend, ask for that early termination info in unambiguous writing, like get it in writing from the person. Make sure that they have the authority to do it. Also, like, sometimes the individual salesperson can't waive those fees. Get that in writing, because somebody that verbally tells you no contract, well, if the contract you sign includes those early termination fees, it can still be enforced because it was part of the signed agreement that, unfortunately you signed. Um, Another one that we see this with is like leasing credit card terminals. A lot of processors, it's a big profit margin point to lease a terminal rather than sell it, because you end up paying a lot of times 5 to 10 times the cost of buying it outright. A lot of those leases can't be canceled either. And the way they try to make it sound good is by saying, well, if the terminal breaks, you get a new one. You'll always pay something called a restocking fee, which is about equal usually to the cost of the new device to just buy it outright. So I never recommend signing either early termination fees or leases. It's just a way to end up spending too much money. Last, like, kind of know what you want. A lot of credit card processors have additional services that they can sign you up for. Basically, like, a lot of these processors aren't industry specific. So they would sell the same solution to a dental office that they might sell to a clothing store. And sometimes, like what I tell a lot of offices is when it comes to a lot of the extra software, you know, if it's tracking your patients coming in and how many new patients did you see, well, your dental software is going to tell you that better than, any kind of third party credit card processing, piece based on like the cards that you accepted. So, a lot of times you can be signed up for extra services you didn't even know you were signed up for. So kind of know what services you're signing up for, know what your priorities are. I mean, you can do things out there like, Best Card offers website payments, text to pay, have a card vault where you can store a card on file for your patients. You can have automatically recurring plans where you basically charge patients on like a schedule if they're paying off like their amount. At the end of the day, know what's important to you. If you want a relatively simple setup in the office, great. If you're looking for some of the bells and whistles that can really help reduce accounts receivables, you're generally going to pay a little bit more for that because those services cost the processor money. Knowing what you want and making sure that that's all that you're getting and that you're not paying extra is a really good tip to avoid extra costs being added on over time. Now, those are tips for like lowering your total processing costs, but I want to look at like also your tips to lower your processing fees. So basically, like, let's assume you've already negotiated a great deal with your processor, you've avoided the problems of kind of signing up, and you're just in a good spot with a good company. Congratulations. Like, now it's at a point where the things that you do in the office can really help lower those costs. And we have 7 tips that are specifically for dental offices that can really make a big difference to your profit margin. So these are the big 3. And honestly, like we have this as something we will send out to offices. This is really good to know for anyone at your front desk that's accepting payments. So 1, encourage the use of debit cards. As we showed before, debit cards have a lot lower cost than credit cards to process. So anytime you can, encourage that debit card use, it, a lot of times will save you 1 to 2% above what you'd be paying on like a credit card. Now with debit cards, my tip, like my pro tip, is I have the front desk staff ask, instead of saying like, oh, do you have a credit card you like to pay with today? Say, hey, do you have a debit card you like to pay with today? If 1 person in 5 changes their mind and says, yeah, I will use my debit card, you just actually save the practice a lot of money in the long run. Second tip, if possible, try to accept payments while the patient is in the office. Card present transactions are, as we discussed, they're cheaper than if you key it in because there's lower risk of fraud. So those chip payments, contactless payments, if somebody's using their Apple phone to, scan on the device, even swipe transactions get a better rate than if you key in that exact same credit card. So getting payment in the office not only makes sure that you have lower accounts receivables, but also a lower cost to accept those payments. Third tip, those HSA and flex spending cards usually run as debit cards. So encouraging the use is not only good for your patients because they, save money on like taxes on like those tax advantage spending accounts, but it's also good for your bottom line. Now, if you're keying in a card, I mentioned this before, always, always, always train your staff to put in the 5-digit zip code and the security code. That's an anti-fraud check, and if that information matches the cardholder info, you get a way lower rate on the transaction. The savings there can sometimes be more than even 1% from keying in a card without the information to keying in the card with it. So always put in that 5-digit zip code. Number 5, and this is one a lot of dental offices don't even realize. A lot of times we've seen a trend where insurance providers are sending virtual cards to dental offices to process payments. The benefit to the office is that it's a relatively cheaper and easier to track. I'm sorry, not cheaper. It's an easier to track way of receiving those payments than something like a direct deposit to a bank account. The downside is those virtual cards are business-to-business cards that tend to be the most expensive types of cards you'll accept. So requesting an alternative payment method from the insurance providers can sometimes save you a lot. That's what I'm talking to a lot of offices about right now, because I've heard, kind of through the grapevine, a lot of insurance providers are kind of lowering remittances. And at the same time, if you're paying 2.5% to accept those payments, that's hitting your bottom line even harder. Knowing to ask for a different payment method is really a strong saving move that you can do. Your front desk can do at any time with like your in-network providers. 6, voiding transactions instead of running returns will save you money because a lot of credit card processors actually charge fees on like returns themselves. On top of that, if you run a transaction and you do a return later on, you'll still be charged the original transaction fees. Voiding a transaction is something that can be done the same day as the original card sale. And what that does is it basically cancels the transaction. So you're not going to pay the percentage fees that you normally pay. Honestly, with Best Card, we don't charge per transaction fees. So like you wouldn't pay any fees at all. That really is something that can make a big difference, because if you're doing a lot of returns and if your credit card processor is charging fees on returns, that can really add up to where you're paying money basically on both sides of the transaction rather than avoiding it entirely. Number 7 is kind of a side piece, but PCI compliance is part of what you have to do as a business that accepts credit cards. I always kind of refer it as the HIPAA of credit cards. They're basically making sure you're doing it in a secure way. Normally, PCI is like an annual questionnaire and sometimes a scan, depending on your system, that has to be done on a quarterly basis. And if you fail those requirements, a lot of credit card processors have fees that range from $18.95 a month up to $125 a month in extra fees that you'll pay. Like, I can't tell you about 80% of the cost analyses that we do for offices, they are non-compliant with their current processor. We're currently at like 92% compliance because we just did a big push. But if you are not PCI compliant, that is something that you should get with your processor to help them get you compliant. And it really is something that can save you a couple $100s a year, just because a lot of people didn't realize that they were paying this extra fee. So that kind of wraps it up for us as far as like, what can you do in the office to lower the cost? I will mention if you've kind of looked at these steps and you're thinking maybe I am overpaying with my current processor, BestCard, we are always happy to do a cost analysis based on, if you send us a recent statement, we can tell you exactly what we would have saved you for that month. 96% of the offices we do analyses for, we actually end up saving money over what they're currently paying. That average savings, as I mentioned, was $4,221 in 2021. In 2022, we are averaging more than $5,000 in savings for the average office. So it can be an easy thing to look at to be like, hey, are we getting the best possible deal? But at the same time, you do have a lot of tools in your toolbox now to go back and look and say, hey, am I getting a price that seems to be in line with what I should be paying near that 2% marker? So I know we'll probably have some questions. I usually get a question on surcharging that I can break down as well, because that's another pricing method some offices are looking into. So if anyone has any questions, I would like to, like I said, answer anything that you guys might have right now.
Hey, thanks a lot, Phil. Always very informative and thorough. And I do have a couple questions here that have come through, and we've also got a question here regarding getting a copy of the presentation.
Okay.
I can definitely facilitate that, but Phil, is that something that you can provide over
Yeah,
email?
absolutely. Yeah, absolutely. Yeah.
Excellent.
If you wanna email me, my email is just phil@bestcardteam.com. And I'm always happy to, provide a copy of the presentation. We have like a one-page write-up of those 7 tips. So yeah, just, we try to be an open book with everything as far as the processing costs.
Yeah, and Dr. Panasamy, again, if you did not get that, you can literally call Best Card as well, and you can get with me as same. Oh, she's got it. Great, thanks. What was I going to say? So I do have a few other calls coming in, and I will pass everyone's information on to Phil so he can just follow up on his own. But here's a question that's come in, and so I get calls from companies saying that we're not correctly set up as a medical provider, and we're getting the rates of
Okay.
retail business. So what changes do we need to take to correct the medical rates?
So yeah, that's a really common sales call, and I can probably even tell you which company it's coming from. The simple fact is, at every credit card processor, you should be set up as a medical provider. When we board a business as like, somebody signing up with us, part of what we put in is your, it's called industry code. So basically it's 8021 for a dental office. It's an IRS issued code for all different types of business. As an 8021 office, like that's something that we have to put in when we board an account, and you'll know whether or not it's been done because that's what allows you to accept HSA or flex spending cards. You can't just go and use those at 7-Eleven, right? So like basically what some processors do is they claim to have special medical rates, but at the end of the day, they're not paying any different base cost than like the interchange that we talked about before. um, the 2 companies in particular that I know of that kind of make that their sales pitch tend to be some of the more expensive options, despite having quote unquote medical rates. So you don't have to do anything special to be listed as a medical office. Like I said, it's part of like the normal sign up process, unless your business is registered incorrectly, which is very, very rare. Like we don't see dental offices that aren't registered as a dental office ever, to be perfectly honest.
Gotcha. Okay, another question's come in here. So you mentioned that insurance cards are the most expensive types of cards for most dental offices would take. Are there better options for getting paid insurance reimbursements?
So you normally have 2 options. One is a direct deposit, sometimes called an ACH, sometimes called an EFT, electronic funds transfer. Generally, like, that's not something that in the past they charge for. I mean, I'll just tell you, as somebody that does millions of direct deposits every month, um, it's something that costs like fractions of a penny, right? Um, I have heard of companies that are charging fees for doing direct deposits, like sometimes even as high as 2%. That's kind of crazy. Just it's a negotiable part of your contract with a lot of insurance providers. So it is something to kind of know. All right, if you want to not accept it as a virtual card, you can ask for like that EFT direct deposit. the American Medical Association and American Dental Association both had articles kind of saying, hey, around 35 cents for a direct deposit is kind of like a reasonable cost. If they're trying to charge like large percentages on top of that, it's probably worth looking really closely at whether or not that's something that's negotiable with them. The other option is receiving checks in the mail. It's one of those things that's a little bit harder to track. It's a little bit slower, but some offices, the savings is great enough that it's actually worth kind of making that change.
All right. Thanks, Phil. So I'm sure that a lot of doctors get this, a lot of practices get this all the time, but my staff has been told over the phone from multiple salespeople that there are new laws that make credit card processing free, but this just seems too good to be true. Are there new laws in place, or what are they talking about?
So yeah, there are no new laws that make credit card processing free. I think we all wish that there were, because who loves paying an extra business expense, right? What these companies are doing, basically as part of a settlement in 2012, the card brands allowed businesses to start surcharging. Now, surcharging credit cards is kind of detailed, and there are rules around when you can and can't do it. Like, for example, you can't ever surcharge a debit card from a patient. What some companies have done is, like I said, they're either surcharging on like correctly with like, all the registration that has to be done through the card brands, or we've seen companies that are also rolling out something they call cash discount pricing. So what that is they're trying to get around all of the surcharge regulations that make surcharging a little bit of a headache, and just saying, oh, well, it's not a surcharge, it's a discount that we're just not applying. The problem is, and this is just my own personal opinion, like we offer surcharge if people want that for their dental practice. We do not do cash discount because in my opinion, it's just not compliant with like, the regulations, and the fees can be relatively steep, not only paying back all of the surcharged amounts, but an additional fee of $250 per transaction. So generally when it comes to like what they're offering, the fact that they say it's free credit card processing, what they're doing is passing on a cost to your patients that's normally around 4%, like the maximum amount that they're allowed to charge by card brand regulations. The problem is if they're doing it on all cards, if they have the ability to turn it on and off for individual transactions, you're kind of doing it the wrong way. The regulations on surcharging are kind of difficult, but the nuts and bolts are you have to have a card reader that will notice a debit card, even if you don't know it's a debit card, and won't allow a surcharge to go through on that card. In that case, you end up having to pay like the card processing fees on debit cards. It's lower than credit cards, but it's still a cost. You also can't do it on any cards coming from patients in states where surcharging isn't allowed. There's currently still 3 states that don't have laws on the books. I'm sorry, that have laws on the books that prohibit surcharging. You also aren't allowed once you're surcharging, because a lot of cards are like kind of fixed use. We talked earlier about HSA and flex spending cards. So if you're surcharging or doing a cash discount, those HSA or flex spending cards won't be able to go through usually, because you have to spend it on specifically like medical treatments. A surcharge is a separate line item that goes through, and a lot of times those cards will decline. And then the last part, and this is kind of the biggest one, for a lot of dental offices, we kind of get them interested in surcharging, but when we walk through the details, one of the stats I think is good to know is we did a kind of like a test of like surcharging to see, all right, is this something that dental offices would like? About 72% of patients that were surcharged said that they would reconsider going back to that same dentist that surcharged them, because there's another doctor down the street that didn't, and it just rubs people the wrong way. That's a really, really high number for a lot of, especially like general dentists or pediatric dentists that rely on getting that same patient and every 6 months in for their cleaning, like that's your highest margin procedure. So it is one of those things I usually tell doctors, like, be really careful with it, because if it turns off a large portion of your payment base, yeah, we're saving money on the credit card processing fees, but if it hurts the number of patients that you have coming in the door, it may not be the best fit for your practice. So it's something like with surcharging, the Best Card is happy to offer and walk through kind of what that looks like, but it's not a cure-all that's immediately going to just get rid of your bill. A lot of times the associated costs with it are relatively higher, to the point that about 60% of businesses that start surcharging credit cards stop doing it within a year, because they're either out of business or it angered enough patients that they go back to a more traditional method. So yeah, like I said, that's kind of a lot of detail, but I think it's a question that a lot of people are getting, especially as you're trying to minimize costs right now. So I hope that's a helpful answer.
Yeah, I think so, Phil. It looks like that's all the time we have, and I don't see any more questions coming through. But I'm going to pass Phil all the attendee names and information, and this way the Best Card team can follow up with all of you. So, we really appreciate you being with us today. And Phil, as always, we appreciate the endorsement that we have with Best Card and the customer service that you provide TDA members. It's over the top, ladies and gentlemen. So. Thanks a lot, Phil, and I want you all to have a great week, and we will talk to you soon.
All right, thank
Thanks.
you.